Hello everyone, this is Sen from Sen Invest. In my last video, I gave you my 5 secrets to success with the Bitsgap trading platform. Today, I'd like to give you a more in-depth overview of secret number 1. Select coins you believe in. So, what coins can you really believe in? Let's find out. First, I like to think about the utility of the coin that I might want to trade or hodl long term. What do I mean by utility? Well, can it buy real-world products? Let's look at an example. This is AppMex. AppMex is a website where you can purchase physical gold, silver, platinum, and palladium. In addition to fiat currency purchases, users can also purchase using Bitcoin, Bitcoin Cash, Ethereum, and Dogecoin. This is a great example of crypto being used to purchase a real-world product. Also, maybe you've heard of El Salvador. El Salvador adopted Bitcoin as a legal tender back in 2021. Next, I might consider whether I can use the particular coin that I purchased to invest in various crypto projects. Let's look at an example of a crypto project. Let's look at an example of a crypto project. This is Yield Nodes. Yield Nodes is a server rental program allowing investors to master node smaller cap cryptocurrencies. While fiat currency deposits are available, the most cost-effective way is to enter the project using Bitcoin or more recently, Tether. Profits from the project and the original deposit can also be returned in Bitcoin. To learn more about Yield Nodes, I provided a link which you can find in the description. Next, let's get into the Cryptometrics. There are many metrics which we can use in cryptocurrency trading. However, today, I'll mostly focus on coin market cap and trade volume. Let's find out more about these metrics. This is Gecko. Gecko here shows me a cryptocurrency prices by market cap listing. This shows the cryptocurrencies are ordered in descending order according to their market cap. Let's look at Bitcoin first. So here we can see market cap equals the current price multiplied by the circulating supply. Circulating supply is simply the amount of coins that are circulating in the market and are tradable by the public. The maximum supply of Bitcoin has not been reached because not all coins have been mined. Also, some coins have been burned or lost. Next, let's look at the volume. You'll note here that the 24-hour trading volume is about 20.6 billion. So this is coin market cap. Similar to CoinGecko, we can find various metrics such as market cap, fully diluted market cap, volume, and circulating supply. The numbers are fairly similar to those on CoinGecko. This is a third site called Messari. Messari offers a pro version, however, I'm showing you the free version here today. So in addition to the metrics I showed you previously, we can also find additional metrics, such as ROI, risk metrics, supply, and many more. Now notice here that the reported volume is very much lower than that which was reported on CoinMarketCap and CoinGecko. It also says here the real volume, which is even lower. Let's look into why this might be. So Messari explains why its real volume is so much lower. It is known that many exchanges conduct wash trading practices in order to inflate trading volume. They are incentivized to report inflated volume in order to attract traders. Real volume refers to the total volume on the exchanges that we believe with a high level of confidence are free from wash trading activities. They tend to be regulated exchanges. So, in summary, the real volume is an underestimate of the global volume. This article from Investopedia also goes into the issue of high trading volumes. The issue that we see here is that some cryptocurrency exchanges are allegedly faking their volume numbers by using bots to boost transaction numbers. The purpose is to raise profile of the exchange and draw in new investors. Websites that track crypto industry are trying to crack down on the problem. So why do trading volumes matter when you're looking to invest in cryptocurrency? So first, trading volumes help avoid drastic price movement in cryptocurrency's price after a significant sale. This is the benefit of liquidity, a factor valued by most investors. Second, they are testaments to the trustworthiness of a cryptocurrency platform and indicators of user trust in an incipient industry that has zoomed into mainstream focus on the back of scandals and scams. Trading volumes are also important indicators of price movement. An increase in trading volume is generally considered a precursor to a big price move. Finally, let's get into the technical aspects of coins. First is white papers. What are white papers? Let's have a look. So here on CoinMarketCap, you can see there's a white paper link. If I click on the link, it will open the now famous original white paper for Bitcoin, which you can see here, Bitcoin, a peer-to-peer electronic cash system. Now, while this white paper does contain technical aspects which would make more sense to someone with a computer science background, it's a good idea for any investor to give the white paper a glance before investing in the cryptocurrency. Next, I'd like to address the question of coin versus token. What's the difference? Here in this blog article from Liquid, the difference between crypto coins and tokens is very clear. We can see that a coin operates on its blockchain, it acts as money, and it can be mined through proof of work system or also using the proof of stake system. Now tokens are different because they don't have their own blockchain. They operate on other crypto coins blockchains such as Ethereum. And nowadays we're also seeing a lot of tokens come out on BNB, the Binance Coin Network, Phantom, Avalanche, and others. So in summary, the difference between token and coin isn't vast, but it can cause a major headache if frequently overlooked. One quick way to decide which one you should use is to pay attention to what you're buying. If it's a product, you would need coins. If it's a service, there are usually utility tokens you can use. So for example, one of my previous videos was on Seifu. Seifu is a token, not a coin. It doesn't have its own blockchain as of yet, but uses the Binance Smart Chain. So if you were expecting me to make a recommendation today on the next hot cryptocurrency to buy, I hate to disappoint you, but I firmly believe in educating my viewers on how to make their own selections based on the principles I discussed today. Look at the utility of the coin. Is it useful in today's world? Or does it at least have the promise of being useful in the future? Look at the metrics of the coin. How does the market cap look? How does the volume look? Are they sufficiently high to support trading on a daily basis? And finally, the technical aspects. Have you read the white paper? And do you know the difference between a coin and a token? So if you enjoyed today's video, please subscribe to my channel. That way you can see the remaining videos in this series as they come out, and also see the reviews that I do on different investment projects. Have a great day, everyone. Bye-bye.